Happy Monday. We're live, and today this is what we're going to cover. So let's get right to it. We're going to do the market rundown. So the first thing we got to discuss is where the position of the price is on the higher time frame. So if I go to the higher time frame, actually, what I'll do is I'll go to the higher time frame bias section that I have in my channel. So every morning I'm showing up and I'm showing my thoughts on where I think the bias lies for the day. So today is the 20th, 420, and I had a bearish bias, IRL to ERL. We were inside of an NWAG, and at 9:30 we want to wait for that H4 to close to get a little bit more information, right? So what do I mean by that? So here's the H4. This is what it looked like at 9:26 in the morning, and you can see the NWAG here. Now, some people will classify the NWAG as the close from Friday and then the open, when the market opens. But I'm just literally using the gap. That's all I really care about is the gap itself. I'm not going to worry about anything that's unfilled. So to me, this is just the NWAG. It's just there as a reference, right? So anyways, here's my higher time frame bias on NQ, and I'll just come back to it from here just so you can see. So if I set this up like this is the bias for today. So at 10 o'clock, we get a close just like this, and you can see price closes back inside of that NWAG. So for me, this would be a bullish bias. Why is it a bullish bias? Because we want to be shorting from bearish FVGs, or in this case, NWAGs. And we want to, long from the bullish ones. Similarly, we want to short from old swing highs, and we want to long from old swing lows. So for me, I had a bearish bias today, and as I'm watching price action play out here is the open right here, okay? So 9:30, we have an open, and the first thing I saw was this 15-minute sweep, buy-side liquidity sweep right here, okay? So the second I saw that, if you're aligning higher time frame biases with your market structure on the middle time frame with the 50-minute, all you got to do is go to the 1 minute and observe what is happening. And this is where most people kind of fail. And why do they fail here? Because of many different reasons, right? There's just a lot of movement going on in the 1 minute. You see a lot of spikes. You might second guess your setup, even though you got it right. And sometimes, obviously, the trades go just immediately in the direction you want. But when you're looking at a day like today, here's our sweep right here. So if we're looking at unicorns, and that's kind of the topic here, right, is unicorns, swing failure patterns, and IFVGs. That's what we're reviewing here. So if we're looking at this section here, we know that we're inside of that NWAG. That's that gray area. We know we just swept 15-minute buy-side liquidity right here, right at open. All we got to do is look to the left to see what we're dealing with. And I say this every time I'm on a live stream, but you're going to usually see, one or two of the three things. One of the three things is a unicorn. Another one is a swing failure pattern, and the other one is the IFVG. And sometimes you'll see two out of the three. In this case, what we end up seeing is a unicorn, right? So if I go right here, we can identify where the breaker block is. And what I'll do is I'll just remove this for a second, just so we can see the screen a little bit clearer, okay? So here's the breaker block, and I'm just going to mark it like this. Now, when we have a system like a unicorn, ideally what we want to see is the cleanest price actions possible. We don't want to see as much chop, things like that, right? The problem is we never know what price is going to do. So you can only execute an action based off what you see. So I think this is a good conversation to have, because right here we know we get the unicorn, right? And we get the closure right about here. So price closes up here, just below the FVG. So let's just say you enter this position, okay? Because technically that's where you would have entered it, right? You would have probably entered it right there. Maybe a market order, maybe it's a limit entry. Regardless, that's where you're you're entering. And the problem here is that when price starts to do the reverse and goes against you, this is where, like I said, the conviction lies in the setup. So if I already know for myself that the H4 was bearish because we're inside of that NWAG, now keep in mind, 10 o'clock hasn't closed yet. So we don't know how that H4 is closed, okay? So I'm just showing you the unicorn here, but I just want to explain that what I had said earlier in my bias was like we need to see what the H4 does. And the only way we're going to know what the H4 does is to wait for it to close. So what does that mean? Well, one of two things. You can risk the entry and take the trade, okay, and then hope for the best. Now, when you're seeing something like this might trigger you to want to just hit the stop loss, right? Just like manually exit. And that's the panic, right, that we feel as traders. And if you did that, the next thing you know, you have the next 5 minutes worth of candles go back into the green. And then you're kicking yourself. So then you re-enter again here. And then price does this, and then next thing you know, you see price go down here, and you put your stop loss to break even. A lot of this type of trading is panic-based. And I'm not saying it's not normal to feel the panic or the anxiety, but you as a trader have to understand the model that you're trading and the characteristics behind the model you're trading. So with a unicorn, ideally it will hit higher time frame liquidity as like a drawn liquidity. So whatever happens on the 1 minute is noise, and you often see Matt kind of set and forget, right? With unicorn based trading, or even when he's doing CISD trading, sometimes he has some panic and he'll close like he did on I think it was on Friday. It's still a win. It's just like I said, just showing you that everybody's normal here, right? But now if we're waiting for 10, because you really want to determine where that H4 closes, right? Because I talked about how we really need to see if price closes inside this range or outside this range. Because if the H4 closes outside of this range, that's telling us something that price is actually pretty bullish because it's ripping through a massive gap. And with the news, you have the news saying there's peace, and then 1 second it flips, and then it's like, no, there's no peace, and then they're closing the strait, they're opening the strait, they're bombing a ship, they're taking a retribution or things like that. Like Iran wants to have revenge and stuff like that. Like these things get dropped on us at any given moment, and then you have a spike candle that forms. So my point is, if you're playing from the technical side of things, which is what you should do, and you got to wait. Okay, so entering here is not something I would have done personally. I would have personally waited till 10. So where's 10? 10 is right here. Okay, so at 10 o'clock right here, this is where the candle closes. So all of this right here is noise, and you actually would have avoided all that just by simply waiting for confirmation. This is very hard to do as a trader. Being patient, sitting on your hands, waiting, because you don't know what's going to happen. And that's the thing, is like, even if price goes to the TP before your confirmation is met, that's okay. You're not going to nail every single trade. Okay? It's those trades that you rush and you get yourself into where you're not waiting for confirmation and then it hits stop loss. Those are the ones that really sting. And like I said, the trades that go to TP before confirmations reach, those are the trades that give you FOMO for the next trade that happens. But if you're able to just be patient and stick to, rules, logic, risk management, you wait. So if you wait now till 10, you now have that confirmation that price has closed inside of the H4, that NWAG, right? I marked it on the H4, but it's an NWAG. It's a weekly thing, right? So once you see that happen, you can do one of two things. Okay, so you know that there is a unicorn here, but now you have a different type of setup as well. So you do have a unicorn here. It's not the greatest unicorn, but it is still a unicorn. But like I said, sometimes you're going to see 2 out of 3 types of setups form at these higher time frame ranges. If you look carefully here, you do have that IFVG setup now. Okay, so you do have an IFVG here now. I'll just mark it like this. So IFVG sets up, and it's inside of the breaker block. So if you're trading off the unicorn, you might want to wait for price to just confirm, right? Close below the breaker block, like this candle right here, and then you might want to put your entry right here. So let's just say that's what you did. And I'll just mark it like this again. Move it over. But this is where the patience pays off, because now you can set your stop loss at the high. That's fine. But now you also have SMT with ES, and it's bearish, so it's working for the trade, right? Now you have that going for you just by being patient. Whatever happens after you execute, though, when you follow your rules, it's a probability thing. You have no idea what's going to happen. All you know what's going to happen is that potentially price is going to reach the drawn liquidity that you feel is strong. Okay, so when I'm looking at a setup like this, and I'm just going to hit rewind here for 2 seconds, because I just want to show you the daily EQ here, and we'll talk about that. But if we go to the 15-minute, and we just want to see where that drawn liquidity is, right? Where is the drawn liquidity? So drawn liquidity could be the London low, right? It is below the daily EQ. It's a lot to reach for. There's also this 15-minute level here, which eventually gets confirmed. So I'll just mark it right now. 50-minute sell side. And then we also have some additional sell side levels like LRLR all over down here, right? And into this area here. So we'll just condense it all as, you know what I'll do is I'll still mark it. Let me just still mark it anyways. And that one right there. And then you can see there's an FVG there, right? Okay, let's go back to the 1 minute. So you have an IFVG here, you have the unicorn there, you have your draws on liquidity here. Now, another thing you can do in terms of projecting where the price is going to go is you can use standard deviations. So you can do this by using Fibonacci, right? So you would just mark the high to the low of the breaker, okay? And I have it set right here, standard deviations. I'll just show you what my settings are. They're set to 0. I have -1, -2, -2.5, -4, and -4.5. The 1 obviously is there, and the 0 is there as the anchor. What that does is it shows me where the -2 and -2.5 is. Now, if you don't know what the importance of this is, these are like a 2R range, right? So from here to here, 2R is literally right here, right? A little bit below, but it's right there pretty much. The thing is, this is the target range. Anything in between here is consolidation. And then if you get acceptance below -2.5, usually you'll see price dip even further into that -4, 4.5. Now, I'm not saying hold your positions to -4, 4.5. I'm just trying to explain to you how to use these standard divs. And there's no guarantee that it's going to go there, right? This is where you as a trader have to figure out, like, are you going to trade 1R trades like me and you risk accordingly and 1R is good enough? Or are you holding off for 2R or holding off for that actual drawn liquidity? Let's see what happens, okay? Because let's just say you did enter here, right? Price does confirm. You know there's an IFVG here. You know there's SMT here at the highs. So right here, thought it tagged there. It didn't right there. Okay. So right here, we are sitting around 1.3 based off this entry, and we've started to take out that liquidity. So the way I personally trade is if I start noticing higher time frame liquidity being taken out, I'm going to immediately move my stop loss to break even, okay? But in a trade like this, you might be wanting to trail your stop loss. The thing is, there's no right or wrong way to do it. It's just whatever feels best for you and that you're most comfortable doing. Let's keep hitting play. Okay, perfect. So now we talked about key draws on liquidity, right? We marked off these 15-minute sell side levels, and I also marked off London low. We all know overnight session highs and lows are a magnet for price action, right? It's the most textbook drawn liquidity to have. So if I'm looking for 2R, and my drawn liquidity in terms of a major drawn liquidity is the London low, then 2R is perfect. Look at where price bounces from, -2 to -2.5. There's your 2R, and we'll just map it out like this again. Okay, so 2R, and it comes on a spike candle. this is what you want. Okay, so this is what I saw today on NQ, and I was observing this in terms of like H4, 15 minute and 1 minute, in terms of analysis, looking to see, you know, are there unicorns today? Are there IFVGs? Are there swing failure patterns? Like, what do we see? This is how I put this trade together. This is how I would how I analyze it in real time when I was actually trading. Now, none of this fit my criteria and my model, but it doesn't mean I still can't analyze it, right? It's like practice, and I talked about this last week. You don't want to forget the key things of how to read a chart, because that's like, you know, that's how you learn to fish, so you can do it by yourself. You don't have to like follow someone else to do things. So this is what I saw, and I mean, to me, it was pretty textbook in terms of like where price went and then how we align things. I noticed there's people in our community that took longs here, and I was a little bit unsure why they took longs, because if you took a long here, then maybe your bias was long. And then I was trying to think like, well, what would make you think like your bias should be long? Because you're trading inside of higher time frame bearish ranges or POIs. And I think people sometimes often forget where price is sitting on the higher time frame. And when you're trading a model like this, you need that alignment, right? You can't just, you can't just trade off any sort of 15-minute level. You want to trade on the right side of premium and discount. You want to trade on the right side of that range. So today, this is what I saw on NQ. And in terms of the bias, it definitely aligned. Let me just close this off here. 11 drawings. Does anyone have any questions about this, by the way? Anything I've talked about here? I know it's a little bit technical, but I just saw this and I was like, I have to talk about this. And if not, that's cool. So that's the setup there. Let me show you the trade I took now. So when I show up to the chart and I want to trade, what I'm looking for is H4, H1 levels pretty much to get tagged. Of course, we have London lows, previous daily highs and lows, Asia highs and lows, things like that. That's what I'm looking for. And then also we talk about the daily EQ, and we'll talk about that in a sec. But before I even went to trade today, I had to make a plan. And I think it's important to note this. So I showed you how I like to form higher time frame biases. Where are we? Right. So at 9:27, I looked into the higher time frame and I made my bias. Okay. But what did I do before that? So if I go to the 20 trade challenge right here and I go to daily check-in, here's my check-in for the day. 9:13 in the morning. It's so important that you have a plan and that you know what you're looking for before it happens, because when price starts to move aggressively, if you don't have the plan, you're going to start to make bad decisions and you're going to trade through emotion versus logic. The only way you get to logic is by having a plan. You got to set that game plan well before price even opens for New York Open, right? So 9:13, I already had a bearish bias. Price actions above the daily EQ. I use that daily EQ as a dynamic level to gauge whether I will be bearish or bullish. Premium and discount is how I view that level. If it's above, it's premium. If it's below, it's discount. And then, also prices inside of a huge NWOG. And I know that's bearish because we're not coming at it from, top to down. We're coming at it from down to up, right? Down to top. So the A+ setup I was hunting for was, at that time, is an IFVG short trigger off of H1 buy-side liquidity or the previous daily high. And I'll just open it up here and you can see where those levels are. Now, these are higher time frame levels. So I was looking to short off of these levels if price was going to give it. However, I would look for an IFVG long trigger if price tapped the daily EQ, the London low, or H4, H1 sell-side liquidity. What does that look like? Well, here's your daily EQ. So maybe price dips into this level and we get a nice V shape. If it doesn't happen there, I know that there's liquidity here and I know there's liquidity here. And that's it. I set my alerts on every single level and I just wait. Okay? This is exactly my process, okay? Can you define the daily EQ, please? Yeah, no problem. The daily EQ is literally just the daily high and the low. If you mark that with Fibonacci or just like a box range, the daily EQ is the EQ of the daily high and the low. And it's a dynamic level, because if new highs are made or new lows are made in the day, then the 50% level will also move, right? So if I just hit replay here and show it to you like this, right, you can see the daily EQs right here. And we can see, I'll just mark it like this, right? So we have the highs and the lows of the ranges right there. And then if I hit play, just watch how the daily EQ moves as price starts to make higher highs. See how it's moving up? So this level can be used as a very dynamic support and resistance level if price is coming at it from the top to the bottom. And it can also be used as a draw on liquidity. Okay, so that's basically what that level is. I think it's, I mentioned this in the chat, but I think it's the most underrated level in trading. And it's primarily, used for people who are scalping or day trading, like, on the 1 minute time frame. Or, I mean, even a little bit higher, but, pretty much for us day traders, right? And we're trading futures, so we're pretty much day trading because we got to close that position no later than, 5 o'clock, right? So just going back to the actual setup, I already had these levels mapped out, okay? London low, and there's also an H1 sell-side liquidity level already there. Can a new H1 sell-side liquidity level be formed? Of course, right? We don't know what's going to happen as price moves, into any of these areas. So I'm just going to stop it right here, and I'll just mark off that H1 level, because what does that look like, right? So if price is dipping here, here's 4 o'clock, here's an here's an H1 sell-side liquidity level. Was there an H4 down there? It was down here. Okay, so let's mark the H1, and you'll see that there's one just below it right there, right? Okay, so let's go back to the 1 minute now, and I'll show you the setup that I took today, since we're already on NQ. It doesn't hurt. So as price was just ripping through the daily EQ, I was looking at this at first as a potential setup right here, because I mean, it was a very massive candle, but this was a level I was looking for at first, especially seeing how price was being bought up, right? So if price could reclaim that daily EQ here, then I thought, hey, there's a chance that the long's going to work from here. But having patience and just waiting for the setups to form is so important. So I waited, and of course, price continues lower. So as price continues lower, the daily EQ plays out of the picture now. So what is in the picture? All I can do is wait for price action to reveal more clarity to me. Okay, so what does that mean? That means that if I'm waiting for price to sweep higher time frame levels, then I literally just have to wait for my setup to form on the 1 minute. Because if it's tagging an H1 level, then that's perfect. Now, another thing I want to talk about in terms of a key level, now typically I don't like to trade after 11, but on a day like today where it's just price was so slow, I was willing to wait a little bit to see if something would happen a little bit after 11. And having that type of patience can sometimes pay off. And, sometimes you can catch a loss too. And then you're like, oh, why did I take a trade after 11? I shouldn't have been trading. But you just wait for A+. And for me, I felt like there was A+ here. So what level am I talking about that forms at 11 o'clock? Well, you have something called the New York low of day. Okay? And the New York low of day is just basically, the kill zone from open to 11 a.m. High and the low, right? So if I know that the London level has already been taken out, I know that this H1 level has already been taken out, what is my actual key level of play? Well, the key level of play now is the New York low of day. And when I started to see the SMT forming, and there was massive SMT forming all day long on both ends, but when I started to see the SMT forming here, I got interested. And we were still in between 11 and about 11:15. So now if you're looking at this type of a setup, okay, you're seeing that there is a sweep here, and you might say, well, there's a breaker block perhaps, but, the breaker blocks are a little bit too high. I'm not looking to trade the unicorn either. I'm looking to trade an IFVG. I'm looking for a V-shaped move with speed. Okay, so I pop up my checklist right here. Now, my checklist says 9:30 to 11. Today, I was going to like just bend that rule a bit because of what I was seeing, like I already explained. And I needed to see something perfect to enter. If I didn't see it perfect, I wasn't going to enter. We're on the right side of premium and discount. We're below the daily EQ, so I can take that long off of higher time frame liquidity. And the higher time frame liquidity sweep is none other than the New York low of day, right? So I'm looking for a strong reaction off of that level, and I'm looking for momentum to confirm the IFVG. And in terms of the clear draw on liquidity, it's very simple. It's right here, the daily EQ, right? I already talked about how it's such a major support and resistance level that's dynamic. Okay, so that's basically my target. So if I can find a trade here, I'll exit here. Now, if you're looking at this, and then we also had SMT. I should note that. So let's just check that off too. So SMT, boom. So we got a lot of things going for us on this trade, or I had a lot of things going for me on this trade. But when I'm looking at the 1 minute time frame, the only thing I saw here was this little tiny gap. And the thing with gaps is they need to be sized appropriately. Okay, so I'm looking for IFVGs to be sized at least around 5 points. Okay, and if it's not 5 points, it's not good, because price can rip right back through that and stop me out, or it's just also not a good enough liquidity range. I want to see more liquidity, more of an imbalance in there, because if price can rip through that, then that's telling us that the momentum is clearly, supporting a move in the opposite direction. Now, because this is too small, what I'll do now is I'll shift to higher time frame. So I'll move to the 2 minute. So I move to the 2 minute. Okay. Now, if you look at the 2 minute, you can see now that price is starting to look a lot cleaner. Okay. But technically speaking, you're working with a stacked IFVG here, right? But I was keeping an eye on this. Then I went to the 3 minute and I thought, okay, this looks even better because it's singular here, right? And another definition for singular is like we're looking for FVGs on the opposing side of where I want price to go. I want to look at FVGs on the side that I want price to go, not the opposing side, because I don't want them to be too close to where my entry is, because what happens then is price could reverse from one of those areas, right? It's a drawn liquidity. So I want it to be as further away as as far away as possible, and if anything, more aligned with where my actual target is, because then I know I can safely take TP there. So when I was looking at this setup, and we'll just measure the points here, right? So this one is 22.5 points on the 3 minute. On the 2 minute, if we combine them, it's 32 points. So for me, 32 points is pretty big. Okay, even if my stop loss is going to be at the low anyways, or somewhere down here, it's still a little too big for me. I personally, the sweet spot is in the 20s. So this is the sweet spot. So we'll hit next, and we get confirmation right there. Okay, now I had a long entry placed right there, and my stop loss, I didn't want to place it here because 61.75 points on a day like today, where if we just look at the range, it's about 300 point range. Ideally with like IFVGs, 60 point stop loss is huge. If I could cut that to about 40, that would be good, just because the size of these candles is also pretty big. So I just placed it right here as a marker point. Okay, it was a soft stop loss, and it got me under 40 points. Okay, so it's about right here. Actually, I had it right here. I think I had it set to 38.25. I thought I had the wick here, but I didn't. So it was at 38.25, and this was my soft stop loss. Now, what's the definition between a soft stop loss and a hard stop loss? Soft stop loss is something that you're using as a visual level, okay, to represent if price does go there, I should exit that trade, okay, manually perhaps, or because it's soft, you might want to wait for a candle closure. Of course, that's going to impact your risk, right? So no doubt about that. A hard stop loss is when you actually have a level like this, and I have an actual buy stop limit set right here. And that's what I did. I just moved my stop limit, the hard one, right here, just in case something freakish happened. I wouldn't have been screwed too bad. And then I have my soft stop loss here. Now, another thing you can do with these stop losses with IFVGs is observe the IFVG range itself. Typically with IFVGs, we do not want to see price closing back below, in this case because it's a long setup, we don't want price to be closing below this level. So as I'm watching this, I'm already entered here. My drawn liquidity is right here. My target is 1R because that is what I do. I look for 1R trades. Okay, so this is my setup. It's a really nice setup when you look at it, right? It has everything I always talk about. So I'm going to hit next, and you can see what happens next here. So then we get something like this. So these next two candles, this candlestick specifically on the 3-minute was starting to look like it was going to close below. Now this is why I use a soft stop loss most of the time, especially if my stop loss level is going to be a little bit closer to the bottom of this IFVG range, because I don't want to get wicked out, and I don't want to be faked out. This happens all the time, and as you can see, it grabbed the liquidity and then went back up. Okay, so now I'm watching this. I have a position size that I took, and it was a little bit smaller than what I normally take for a few reasons. We're past 11 o'clock, and I didn't want to over risk myself with something like taking like one contract on NQ. So I moved to MNQ. I opened about 5 contracts there. But what I told myself was like, okay, after I started seeing this, because it wasn't a fast move higher, I was like, maybe I'll add to that position if I start seeing a nice strong recovery, because ES was flying. Now it's not showing that's flying here, but ES was flying, and what you'll notice is ES has tagged the daily EQ. So for me, I know how powerful the daily EQ is, like I talked about earlier. To me, it just seemed like, okay, if this thing's going to go higher, ES is going to show the way, and maybe I can add to my position. So I'll go back to NQ. And another thing I started to observe was the lower time frame. Okay, so I started observing the 1-minute time frame. And the reason I was observing the 1-minute time frame was literally because of this level right here. So the second price reclaimed this level, that would be my signal to add to my position. That's what I told myself, because I now knew that even if I did add to my position there, this wick right here that swept into the liquidity, I have a clear invalidation point. So my hard stop loss moved from here, and I actually was able to then say, okay, well, I can now safely move it to about here now, right under that wick. Because if price sweeps back below again, I mean, the trade's cooked, right? Because the price should not be going back down again. The best IFVGs have very strong momentum and just literally go in the other direction once they form. It's like a boomerang, right? Hence the V shape. So right here, we get price closing and moving above. And I didn't even wait for this thing to close. I just entered literally around this area. And I knew it was where my original entry was anyway. So I was like, okay, it's still safe. So now that this is set, I can go to ES. And I just want to show you ES. Look at the way ES looks, right? Beautiful, similar liquidity sweep off the New York low. But the best part is like the way it sweeps off of the daily EQ. That is what you want to see. That is exactly what you want to see. Let me get rid of this thing. Okay, so I'll go back to NQ for a sec. And now I'm going to go back to the 3-minute. Okay. Hit next. And then boom. And this is how fast IFVGs can play out. Now, granted, this is the 3-minute time frame, right? So from my entry here at 11:09, TP is taken at 11:21. So, just under 10 minutes. That's really good, right? I only needed 38.5 points to catch my 1R. And look at where price reached into. The FVG and the daily EQ. And that was my target, right? Whatever happens after that is okay. You don't have to worry about being perfect. But this is how I set up the IFVG setup today, or the play trade. If I hit play and show you what happens next, it's just a lot of this. So a lot of chop here. And there's no telling what price is going to do. Is it going to actually hit higher targets, or is it going to reverse? No one actually knows. And the beauty with the way I trade with 1R is it doesn't matter. I don't really care. My goal was to just identify where the reversal could potentially form from, align key principles, which I've basically explained in depth right now, and kind of the thought process, and let the probabilities play out. The other day, last week, there was, I had IFVGs that took, I think I had TP hit in 37 seconds on one trade. I had it hit in like less than 2 minutes on another trade. And the thing I found interesting about those setups is that it just confirms to me that when the IFVG model is working the way it's supposed to work, it's gonna be that fast. So all I need to do is identify a few key principles, remain patient, because I'm looking for those higher time frame levels to get tagged. I don't care about a 5-minute level. I don't care about a 50-minute level, right? Unless that 50-minute level is a London low, or, in this case, maybe it's a New York low. But even here, you can see it turned into an hourly sweep, right? So it's still an hourly sweep. That New York low of day turned into an hourly sweep. All of these things start to align in the favor that I want in this trade setup. Okay? But I'll just come back to the beginning. The key to this whole thing wasn't me executing an IFVG. The key to this entire setup was this. I had a plan. It was at 9:13 a.m. and I just waited for these levels to get tagged. And this one right here is where the long was formed. That's it. And this is why I use these types of higher time frame levels. I don't need to have overcomplication. I don't need to have, I don't need, I mean, there's so many different types of terminology out there. I've been hearing things about like 2-stage setups or something like that. Like, there's just so much overcomplicated technical stuff out there. I really don't think anyone needs all that stuff. But at the end of the day, your brain doesn't function like my brain. So maybe that makes way more sense to you than the ease and the simplicity that something like this does for me. But nonetheless, the point is you can be very profitable with a very simple approach. And that's kind of my takeaway here, right? Besides the planning piece. So anyone have any questions about that? That was the NQ setup. If I go back to the memo, we did NQ, showed you the trade. One thing I didn't talk about was the VWAP, because the VWAP did play a role in how I was looking at things. Now, I brought the VWAP into this based off of how I was using it with the IB. So the IB is formed with the 930 to 1030 range. So all I was doing was I went to 930 and set the VWAP. And what you're seeing here, let me just rewind it just a little bit. Let's go to about here. So this is what the VWAP looked like when I entered. And you're looking at this and you see 4 lines, okay? So the VWAP is this blue line. What does this represent? This represents another form of draw on liquidity. What do these lower bands represent? These lower bands represent exhaustion of a move that's obviously heading in the bearish direction. What does that mean? It means that there's a potential for a reversal. If price is moving aggressively in this type of an angle and you're hitting higher time frame liquidity levels, I was really observing how price was responding to this lower level band. And I'm going to show it to you right here. Let me make it a little bit bigger. Actually, you know what I'll do is I'll just get rid of this. And we'll keep the daily EQ. I'll get rid of the SMT. And I'll get rid of the IFVG indicator as well. Look at this band right here, this lower band. Okay, I was watching this, and this was another part to why I added to my position, because not only was I looking at the 1-minute IFVG gap here, I was also looking at this lower banded VWAP, because it's holding support here, right? Beautifully. So let me hit next. And you're seeing how it's starting to round, right? that's what you want to see on a reversal of a trend, right? These are lagging indicators, of course, but that's okay. It's giving you confirmation or potential confirmation that we might be starting to see that reversal, right? Because it is happening at a key area. If I hit next again, and then there's TP. And that's literally it. That's all you need. Now, if I just keep hitting play, watch where price tags. Boom. See that right there? Ping. Draw on liquidity. Daily EQ, draw on liquidity. And then, of course, we have market structure, right? Where I was showing that there was an FVG here on the 3-minute time frame that I was eyeing. So you have all of these concepts put together. This is how you start to build confluence to what you're seeing and how to maybe project where you want to see price go, and that's where you would want to take your TP. And it does. This might be sounding complicated, but when you start to kind of look for these things every single day, you'll start to see that it's like a rinse and repeat process. And it's not very complicated as long as you understand how to view the market structure and how to view specific things. Now, this VWAP thing is an additional thing that you don't need. I just kind of threw it in there because I was looking for additional confirmation on this move right here. I just wanted to find something else to help me feel comfortable with adding to that position. Enki says, are you using an indicator for the EQ level? I sure am. It's called the no duplicates interval range in EQ. I've shared this many times. If you just kind of go through the general chat, just search for my posts and just type in no duplicates, the link will come up. It does list a whole bunch of different levels. I don't really care for any of these levels except for one, the daily EQ. That's it. That's all I need. So that's the NQ setup that we saw from the short with the unicorn aligned with the higher time frame bias, and then I also showed you the IFVG setup and how I set that thing together and how I put that together, and outlined how I basically trade an IFVG. So we'll move to IBs, unless anyone has any questions about what I just showed. Okay, so IBs. Everybody knows that's been following this thread that there was a huge losing streak. Absolutely massive losing streak. I could not believe wow, it's not we, it's me. I just couldn't believe how many losses were being taken. So last night, let's talk about Globex. Okay, so here's Globex. I was looking at the data. I started to switch how I was observing the data because I felt like, we had some setups where I was saying like, hey, if I look at 2 years, 3 years, there's a 90% chance price is going to the IB high if it closes above the MP, for example, right, to go long. And then those setups just completely fail. I mean, how reliable is 3-year data? So I've gone back to just observing 6-month data, and the only time I'll move higher than 6 month to say 1 year is if there's like one occurrence. But even on a day like today, I just said, hey, it says 100%. If it does say that, that's telling you that there's only been one frequency. But let's just go back to Globex from last night. So Globex last night is showing us that MNQ and MES, first off, they're both aligned. They're both correlated. That's one thing I always wanted to make sure I saw was I wanted to see, if it's going to be an IB low to IB high, I want to see them both do that. I don't want to see uncorrelation, which we saw this morning, and I'll show that in a sec. So the data was saying if the lows form first, 76% chance to the high, 85% chance to the high if it closes above the MP. MP is just the EQ of the IB range. Same with MES, 75%, and then 78%. So looking for longs on those two assets, number one. Going to MGC is a little bit trickier because it's giving us a very low percentage to the IB high from a general perspective. And we did have a low to the high. It might look like a high to the low, but I just want to show you it was actually not the case. If I go to MGC, and I believe would have been back here. I'm just showing this to you because you got to really be mindful of what you're seeing if you're trading IBs and you're trying to figure out what what level formed first. Because if you look at this just off, with plain eyesight, you see the high there and you see the low and you instantly go, oh, it's a high to low setup. But this candle right here is very close to this candle. So what can you do to figure this out? Well, all you got to do is either you hover around the candle to see, what that level looks like. You can pull up, let's see here. Let's pull up something fancy. Where is it? That's not it. Thought it was there. Oh, here it is. Price note. So let's attach that. So it's showing us 48.15. What's this one showing us? 48.15.1. So super important to pay attention to the details, because in this situation, you don't have a high to low, you have a low to high. And that, if you're looking at the data, that can impact that data. Now, if you look at what happened, it's still ripped to the stop loss, right? But then guess what happened? It went the complete opposite way. So that's called max pain. So that's one thing to talk about, is just understanding those levels. 67% chance to the high. So I've often talked about the threshold. For me, that threshold's usually around 70. Last night, I threw caution, to the wind. I was like, screw it. I'm just going to enter it. I won't take a big position size, but I'll still take it. I mean, it's 67%. So why did I take it? I took it because the MCL setup was showing the opposite, the inverse. And I know that the two usually are inverted. So if there's a 75% chance that the short's going to potentially play out on CL, my feeling was that, hey, maybe this long will actually work out. Okay, so if I go back to the chart, let's just split this in half for a sec. IB. I'll turn this one to MCL. And let's just go back to okay, so here's yesterday's range, right? And I'll do the same with GC. Okay, so just to show you what I mean by that correlation, how it's inversed, and the thought process I had. So here's the IB range that we can see right here. You know what I'll do is I'll highlight my... Okay, so right here, you see prices going higher here on CL. But if you follow on the right side where the cursor is, do you see how price is actually going down? So when the short gets entered here, GC just dumped. But the second the short started to work out with CL right here, look at what GC does. Complete opposite. Rips to the long. So the idea was right, but the low probability screwed up the setup. I should have probably not taken it, but I took a risk. And like we talked about, someone had mentioned this earlier, you take a trade, you already have accepted the risk. And I didn't take a very big position size, but I did say that if both of these trades lost, that eval account I've been working with is going to be blown. And that's because I've been taking loss after loss on it. Thankfully, this was a loss, but, GC was a loss, but CL wasn't. And to make things even more interesting for myself, I started to look for a IFVG setup after all that on MNQ and took a continuation play on that same account. I thought, let me try to see if I can, beef up that account a little bit using some trading skill. And sure enough, it did work out in my favor. So I was able to get that account, moved up a little bit higher, but still it's pretty close to stop loss, or I should say liquidation. But I just wanted to show the inverse correlation here on GC. That was the Globex play. And with CL, if I go back to here, let me do this. And if you just observe this type of play, there was a little bit of drawdown, and then price went the right way, and the TP was hit. Another thing I've been looking at is these IB levels. We can gauge how far price might move lower to or higher to based off these levels. And there is a percentage of time that price might hit this lower level. This lower level is, I think it was like a 0.5. I'm using a higher ranged version of this. There's also this lower range version that I also use. Let me just set this up. So you'll notice that the levels are not like 1, 1.5, 2. These are like 0.1, 0.1.5, things like that. So if I hit OK, show it to you like this, what I can then start to do is, you see how it's -1, -2, -3? I can go on Edgeful and then see what the data says in terms of probability that one of these 3 levels or even more might get hit, because what you can then do is instead of taking TP here, maybe you take a little bit here, but then you hold off to take TP down here. And last night, let me just see if I have my data correct. One sec. Let me see if I can just pull up the... Just give me one sec. Let me see if I can find it. Hopefully I didn't delete it. May have deleted it. Just give me one sec. Let me see if I can find it. MGC. Yeah, I may have deleted it by accident. If I go to Edgeful though, maybe we can just do a quick little run through. So basically, if I go to Globex here on the IB levels, actually let's not go to Globex. Let's use the New York levels, but I'll just switch this to Globex. So daily, we are on CL, perfect, and I'll just customize this just so you can see what I'm talking about. So when I'm on Edgeful, I can have all the days selected, but you can see my ranges, right? 0.1 to 0.8, and then -0.1 to -0.8, depending on if it's a breakout or a breakdown. If I hit save, what I'm looking for in this case, because that CL setup was a breakdown, right? So here's -1, -2, -3. Let's just keep in mind -1, -2, -3. Or 0.1, 0.2, 0.3, excuse me. And I'll go to breakdown. So in this situation, there's about 17 days worth of data. 17 days, this is like a general average. It's showing pretty much every level gets tagged. Okay, let's just tighten up our search. So it was Globex, so it's Monday. So I'm only going to select Monday now. I'm going to hit save. It's using the daily range, which we want. And what's interesting here now is this is also showing 100% on all of them. 5 days worth of data. So is that a lot of data? Not really. Go to 1 year. So it's showing us pretty much the same thing, right? If I go back to the actual level here. So this is how you would kind of interpret that data and then apply it to the MCL chart, and then you can start to either skim profits at different levels, or you can just hold off to take full TP and see how price moves. So for example, like when price hits this level here, you just wait to see how price moves, and you don't have to be greedy, you know what I mean? Like if price ripped right down like on this candle, you just manually exit, right? I mean, you've already souped up that trade and juiced it for a little bit more. So it's not just 1R anymore, right? But that's how I've been using Edgeful to observe those IB levels and just kind of learning more about it. So I think that's pretty cool. Let's talk about today, because today, where are we here? 44444. There we are. Okay, I'll just take this off. I'll go back to today's data. So I do post a lot in this thread, just kind of showing you what I see. As you all know, sometimes I have some fun. And then I talked about the short, how the short was tagged. And then I also talked about how sad it was that, like I said, GC had that recovery and then ended up going to TP. But the losing streak was over. here's the TP for me. Hopefully, if others took it, you also got the W. Maybe you held on longer. So thankfully that worked out. And now here's the data for today. So today, this morning, this is what we're looking at. Now I mentioned here all data is per 6 months data. If it says 100%, there's only been one frequency. So you can see like here, it's showing 100%. So when the morning started, MNQ and MES are not really correlated. MNQ was forming from an IB high to an IB low, and MES was the other way around. And then because MGC and MCL were low probability, it was a skip, right? So if you just look at MGC here and MCL, we know MCL did the IB low first. So all of this, 63%, 60% is not very, it's not very attractive. MGC had the high form first, I believe. And looking at this, it's 50%. Even if it had the low form first, it's still hovering in that 60% range, which is just not attractive. So the only real thing to look at was what MNQ and MES were doing. But because they're not correlated, there's no trade. And that's basically what happened for me. Was I just observed what was happening, and that was the end of it. Nothing else to work with. So if I just go back to today, where are we here? So I'll just show you what I mean. So you got MNQ, or sorry, this is MCL. Let me switch this up to MNQ. Okay, so MNQ on the top left, MES on the top right. Let's just look at those two for a second. That's the lunchtime IB, and then here's the morning IB. Okay, so here's MES's IB. You have the low, you have the high. I thought maybe this thing might actually sweep lower on this move here, because then it would align with MNQ. Oh, that's weird. Why does it look... Oh, that's the wrong one. Whoops. I think it's because I have the replay on. I just realized the mistake I made there. Okay, that looks way more accurate. Okay, so once again, low to high, but NQ has high to low. And when I started to see that type of correlation, that type of uncorrelation, I'm not interested. That's how I've looked at these IB trades. They have kept me safe. And the reason I do this is because you actually don't know which setup is going to work, because what you have now is SMT, right? You have SMT that's forming. And when you have SMT forming like this, and it's bearish SMT, you still don't know what's going to happen, right? Like, you can anticipate a move lower supporting the high to the low idea, right? And if you took that idea just blindly trading it that way, I mean, you would have had to front run the entry before 1030. But if you tried to take that long idea on MES, you would have had stop loss hit, right? But you can see the reason why. It's just it creates bearish SMT or bullish SMT, and you don't know which asset to trust. And because of that, that would make me just want to sit on my hands and not take that trade. And then once again, the probabilities were pretty low in terms of these two trades. If you had tried to take this trade high to low on MGC, it failed. If you tried to take the high to low approach on MCL, that also failed. Oh, sorry, that's lunch. I take that back. If you took the low to the high, just blindly taking it, this was a win. One thing I have noticed with CL, if you just blindly look at the data on CL and just look at, like, did it go IB high to IB low or IB low to IB high, and just kind of enter that way, the data is actually not too bad. If you just blindly look at it, I would just say go take a look at the last couple of months. It's not perfect, but it's actually better than I thought it was going to be, because if I was doing the same thing with like MNQ or I think MGC, it wasn't very good at all. But CL surprisingly had a little bit of a better statistic on a blind approach. So that kind of caught my eye, and I just wanted to share that with everybody. So yeah, so that was IBs. We got Globex later tonight. I will be honest with you guys. This is probably going to be the last week I trade IBs. My Edgeful sub expires on Saturday. And I was literally, like I said, this whole month has just been about learning. I've never been, I never hid that from anybody. And, just to explore another model that is pretty interesting. I really enjoyed kind of going through the data and the way I've been going through it. Like I'm big with statistics and things like that. So I really like to get my hands dirty that way. But I think in terms of, if I look at like the actual data, and like, is it worth it? Is it not worth it? Like for me, trading IFVGs has always been my bread and butter. I never hid that as well. And even today, just kind of showing you how I'm walking through that type of a setup. I just feel like there's such a life skill there that I don't want to like lose, right? Where we can analyze, higher time frame to middle time frame to lower time frame, and literally like put a trade together based off of market structure, based off of time, and to me, I think that is such an invaluable skill. Like I would never want to stop trading that way, and move to a non-market structure based approach, because the big problem I have is with the data. If you're data driven, then the data is going to reflect what's happening in that current period of volatility. And I had mentioned this in a previous live stream that when you have volatility spiking due to war, COVID, tariffs, I mean, it just seems like there's always something causing headlines, causing spikes. The data really, I don't know, like how trustworthy can it be down the road, right? Like, I don't know. And that kind of alarm, that's an alarm for me. And the secondary thing too is like if you're basing trading off of, the data itself, and you're using a site like this, no knock to Edgeful, of course, but like it's about dependency. Like I don't need to depend on any indicator to trade an IFVG. I have indicators that I use to trade IFVGs, but that's just because it makes my life easier, right? It marks things off for me. That's the whole reason why you should use an indicator, is to make your life easier. But you should already have the principle, like the underlying principle and the mechanics behind the setup, like already ingrained in your brain, and you can literally do it in your sleep. Like I don't need an indicator to tell me that this is a good IFVG, right? And I actually turned this off to show it to you guys. And even like the daily EQ, like you can manually do this yourself just by going to the daily time frame and literally marking off Fibonacci from the high to the low, and literally just mark off 50% like this. If I go back to the 1 minute, see how it's the same level? So, I mean, you can manually do all these types of things. I only use indicators to make my life easier. When it comes to this type of trading with the data, if for whatever reason this data does not load because maybe the system crashed, what happens if Edgeful disappears? These are the types of things that kind of run through my head, because I'm trying to understand the risks involved. And when you start to depend on something like this, what happens if it disappears? There's no trade, right? Like you can't do anything because all of your decision making is based off the data. You're not blindly just trading IB low to IB high, right? But if we compare it to, say, IFVGs, ICT concepts, higher time frame analysis, we talked about unicorns, swing failure patterns, and IFVGs again. I mean, these are the foundations to being able to show up to a blank chart, right? Like I can show up to a blank chart with nothing on it, and to be able to understand what I'm seeing on a blank chart and mark things off properly. And it takes practice and time and a lot of failure, of course. It's not easy. Some of you are probably already there. Some of you might be still learning. But that's okay. There's always going to be a start to a journey. And there's never an end to that journey. But the key here is there's an opportunity to learn how to fish, and for you to then be able to catch your own fish. And if you're able to get to that point, that is, like I said this already, but it's such a huge life skill to have. And if you're still struggling on the trading side, and it might not be technical. And this brings me to the next topic of conversation, and then we're going to end this thing, is mindset. Worrying about future outcomes versus focusing on the present moment. this was kind of a running thought that I had in my head after I had a conversation with a friend who, I'm not going to say names or anything, but they hit a 1R trade right off the bat in the morning and didn't feel like it was enough. Now, why would they feel like it's not enough? Because they're thinking, like, how long it's going to take me forever to get to payouts. So already thinking about a payout instead of thinking about what you just did in the present moment, which is you showed up, you analyzed, you did the work, and you got paid. And you took your 1R, and that's it. Just like what I showed, how I did my trade today. I took that trade, 9 minutes, it's done. I had to wait for it, but that's okay. My one trade, and it's over. This person didn't feel like it was enough, so they tried to trade more. And then they took a loss, and then they took another loss. And now they're in drawdown -1. Then they took another trade, got back to break even, took another trade, got to about plus 0.7. Now, if you think about all this, think of the roller coaster ride this trader went through with all of those trades in the New York kill zone when they already had 1R and it was easy and everything worked out perfectly, just like they had hoped for it to do because that's how they trade. And then to overtrade and then have to claw your way back and to only get to 0.7 on the day, and you're like think of how much energy, how much emotional strain you have going through something like that. I'm sure many of us have been in this person's shoes in that situation. I know I have. Sometimes it works in my favor where you can claw back a bit, but sometimes you actually make matters even worse, and then you start to blow the account. And I know that that's also happened for myself and for this other person too. So it's a very real thing. You can't worry about the payout, right? If you're trading on an eval and you your system is trading, like 75-80% win rate, let's say, right? Because with IFVGs I trade, I'm hovering around the mid 70s, we'll say. If it's a really good month, it's going to be in the 80s. So that tells me that my losses aren't going to string together as much as, like, say, if I was trading a different model. So what does that mean? That means I can actually risk a lot more money to expedite that eval. So if that eval has a 50% consistency, like, say, Lucid, and my target goal is $1,000, I can take 2 trades with a risk of $500 for, we'll say, right? And hope that I string 2 trades that win back to back. And it'll probably take 2 days, right? But that's what I would do with evals nowadays. And then in terms of the funded side, well, on the funded side, that's where you have to then pull back, right? Like, I can't take $500 trades on a funded account. I might want to lower that down, to like, say $250 to $300 a trade. The thing is, you can't be too cautious because that is going to then put you further back in terms of trying to get to that goal. But at the same time, if you do take that lower risk, you now have to deal with the mind, like the thoughts in your mind that are telling you this is taking forever. Like, it's not like we live in an era where everybody there's no such thing as delayed gratification anymore, right? Like back in the day in the 90s, like, we had delayed gratification. You had to wait for things. We had commercials on TV. You had to wait for the commercials to finish before the show would start again. That was normal. But what I'm saying is we want things to happen now, because that's what we have with the internet, right? And with even the speed of the internet and the way things load, like, there's no lag. You want something, you got it. ChatGPT, you have a question, ChatGPT has the answer for you, right? Like, we have unlimited potential and access to information at our fingertips, and we don't have to wait for it. But when it comes to trading and risk management, you literally have to understand that challenge that we all face, and like, learn how to deal with that emotion. Because if you can't deal with that emotion, I don't care how technically savvy you are on the chart, your psychology and your mindset are going to screw you over. It will happen. You will blow your accounts up. I only speak from experience here. I've blown way too many accounts in this way. And I just, you want to flip a desk because you know better. So accepting that outcome, you get 1R, move on to the next day. The thing is, there's 20 trading days typically in a month, right? And if you're going for 1R trades and you have a 70 or 80% win rate, right? Like think about how many R's you're nailing on a trade like that, or in your journal or in your account. You know what I mean? It's really good. Like 80% is 16 wins. So if you were trading with 1R per trade and you have 16 wins, that's 16R. And you literally only have 4 losses potentially. And that's if it's very, very, if we use the duality of, right and wrong, forget the gray area of mistakes. People are worrying about how long it's going to take them to get a payout. But it's like, if you just focus on the present moment of executing that trade, like I showed you today and how I did it, journal about it, mission accomplished, show up the next day. The thing what you'll notice is when you show up at the end of the month and you look at what's happening, you're going to see how fast your account actually grew. And that's all because of delayed gratification. Now, granted, I'm trading IFVGs on the 1 minute time frame. So there is a fine line where I say delayed gratification because I do want those trades to play out quick. But that's strategy driven, right? If the trade's going to take longer to play out, that's fine. But I know that the best IFVG setups aren't going to take an hour to play out. The best IFVG setups are going to play out within 10 minutes. So coming back to the mindset side of things, I found this post on Twitter. I don't know who this guy is. I just kind of randomly threw in a search like trading anxiety. And I found this and I thought it was so good. I mean, it's stuff we probably all know, but it's not bad to remind ourselves about these things. Keeping your strategy simple, like not forcing yourself to take a position in a trade that is not your actual trade. Like if I trade IFVGs, why am I taking a bearish unicorn setup? Even though I had showed you, I marked it off and I had mapped it out and I was analyzing it, like I have no business taking that trade because that's not my A+ trading model. That's not what I trade. That's not what the data tells. Like I don't have data built up for that to take that trade. That's an exercise to stay sharp, to stay in the know of how to read the charts. I don't need all these indicators. You know what I mean? I showed you, like you can do things on a blank chart. You should be able to. That's the beauty of why I found Matt, because Matt was the first guy I saw had nothing on his chart. And I was like, how are you able to do this? Like, how can you read a chart without RSI or without MACD or without moving averages or Fibonacci? This guy had nothing on his chart except like a couple of horizontal lines with ERL and IRL. And I was like, what the hell does that mean? Lo and behold, it's some of the most powerful concepts I've ever learned. And it's the most simple stuff. Risk management. I talked about how you can expedite with a greater position size if you have data telling you that you can do that, and you believe in what you have and you know that you can pass these accounts quickly trading properly. But when you get to funded, you want to like lower that risk, right? You have to take your time. You can't, because if you don't take your time and you screw up, you're going to revenge trade. You're going to stop using the stop loss because you're like, I don't want to get wicked out. Like I don't want to get taken out of a trade prematurely. But so it's important that we think in those probabilities. Like I talked to you about, there's 20 trading days. How many trades are you taking a day? If it's one trade a day, then the max trades you can take in a month are about 20. And then if your winning percentage is, like I said, 80%, you can expect 16 wins and 4 losses. When you think of the probabilities of things, that 16 wins equals 16R. And if 1R equals $500, right? 500 times 16 is 8,000. So even before the month starts and I take a trade, I already understand the probabilities and the numbers of things. Think of it that way. And that's like coming right here, right? Understand win rate versus risk to reward, right? You don't need 90% wins. You need good risk to reward. this is very subjective, right? Because yes, 50 to 40% win rate can be profitable if you have a 1 to 2 risk reward. But the thing that comes with a 40 to 50% win rate is the psychological and mindset impact that will imprint on you of losing 50 to 60% of the time. Can a trader, can you do that? I can't. I tried and I can't. There's amazing traders that have 40% win rate and they let their winners run and they skim profit, right, with those runners. But they lose 60% of the time. And they can do that. They can push through that 60%. It doesn't impact them. I tried to do that. It had a negative impact on me. I cannot lose that much. And maybe it's just because I grew up in a sports environment, like with hockey, and, there's no room for failure, right? Like every inch matters. Every inch counts. And to lose that much is just not in my DNA. I can't do that. Step 8, journaling, right? After you trade, you got to journal. This is the stuff that helps to keep you on point, helps to keep you grounded, keep you humble, keep you neutral. How do I journal my trades? I journal my trades on Notion. If you go to my channel right here and you go to Trading IQ, if you just scroll here, so I have a game plan here on Notion. I think I had a trading journal here too, if I'm not mistaken. Right here. Trading journal template. If you just click this, it'll open up the template. I'm not going to open it because it's actually, you know what? I can't open it. And then you can duplicate it for yourself, right? And now this is just a template. You can do whatever you want. It's just, for me, this is kind of how I have operated. It's very simple stuff, but when you start to put all this in and then you look and review at the end of the month, right? All of these notes that I make here are going to start to speak to you. All of these numbers here are going to speak to you, and they're going to tell you something. They're going to tell you where you can do better, and they can tell you what you're doing really good with. So when you see that type of duality, you can then start to double down on the things that are making you successful, and you can start to stop. I say start to stop, but exactly, Groovy, pattern recognition. You can start to identify what the repeatable mistakes are and then work towards not repeating them. So if one of my repeatable mistakes, this is a true story. One of my repeatable mistakes was that I was taking trades before 9:30 or before news. And I realized I'm racking up stupid losses because I'm not waiting for news, or I'm not waiting for the market open because I wanted to trade pre-market. So that's a repeatable mistake, right? Guess what? It's a simple mistake to correct. All I have to do is not trade before 9:30 or not before news. So if there's news at 10, I don't trade before 10. I wait. And by doing that, I eliminated so many losses. So by doing stuff like this, it's going to help to expose your greatness and your weaknesses. So journaling is insanely important. And then, strategy is not the problem. I already talked about this, right? Once you start to learn all the ICT concepts you need, you don't need to know everything, okay? You just need to know a few concepts and put them together because they will work together. That's all you need. After that, it's all about your mindset and how you operate as a trader, right? If you compare yourself to a sports figure or a musician that takes the craft seriously, right? It's all about practice. You have to show up. You have to practice. You have to look at the tapes, right? You have to, if you're a musician, you have to listen back to what you did over and over and over and over and over again. I used to be a musician a long time ago, and it feels like a previous life. But I can't tell you how many times, you'd write music on a guitar, and I would just record it because we didn't have computers to record stuff back in the day. But it's I would just record it on like a tape deck or a memo note thing, and I would just record a bunch of all the ideas I had onto this tape. But then I'd have to go back and listen to that tape over and over and over again to figure out what I like, what I didn't like, what could I change, you know what I mean? But that's what I'm talking about. It wasn't about the skill at that point. It's about the mindset and everything else. Psychology, 70% of trading. Like, once you figure out the technical side, I'm telling you, you'll realize that is the easiest part to this whole thing. And I'm sure many of you can already relate to that. So consider the mindset piece. Consider to not worry about future outcomes. Worry about, and I say worry, but it's like, don't worry, but focus your intention on the task at hand. So I'll just go back to like what I do every day. When I show up every day to trade, the first thing I'm doing is I'm checking in. After I put my levels on a chart, I check in and identify the key levels that are of interest to me even before the market opens. Then I go through my exercise of identifying bias on the higher time frame. Even though I don't even use this to set up my trade, this is done as if like you are someone who goes to the gym and you have a warm-up before you do the actual heavy lifting. You'll do a quick warm-up with light weights, right? That's what this is for me. This is just warming me up. And I'm doing this before the market opens. So when the market opens, I already have everything ready to go. I've already stretched, right? Put that in quotes. I've already stretched and I'm ready to get to work, right? Get to the meat and potatoes of the session and what I'm looking for. So you put in that type of work. What happens is you'll start to see, like I said, and then you journal and you put it all together. I promise you will start to accelerate in your trading. And the thing too is like you're not alone when you do this. There's a whole community of people that love to share, that are super smart and intelligent, doing things that I can't do. And if they have a question, someone will have an answer. You know what I mean? And if you have a question, someone else will have an answer to your question to help. Like, there's no shortage of help here. Everybody wants to see everybody succeed. Someone had said this earlier, right? Finest, I think that was you. You said, you know, it's so nice to see everybody winning. And that's the truth to this whole thing. You win when everyone else wins. I mean, what's the point of winning by yourself? It feels so much better when everyone's winning too. And that's what I like to see in this community. Even though we're trading different things, it's okay. My whole concept of importance is people executing A+. And that's why I have the 20 A+ trades challenge, right? Because I want to see people succeed. So I want to see every single person take it seriously and put in the work, because maybe you don't even know what to do. You don't understand where the bar actually is set and what you have to aim for. Or maybe you're stuck and you can't figure out why you're stuck. Things like this are going to help you. I'm also doing this too, right? Like, this is all part of the process to achieve success and to, you know, maintain profitability in this space. And it's not easy, but you keep doing this and showing up every day. 21 days to form a new habit. If you do that for 90 days, you create a new lifestyle out of it. And it's not just your trading lifestyle, it's the lifestyle you have outside of trading. You start to respect your time more. So I'll leave you with that. I appreciate everybody's time today, and I hope you got something out of this. I did record this. I hope it did not fail in terms of glitching out and freezing and stuff like that. But if it didn't, then I'm going to upload it to YouTube, and then I'll post the link inside of my channel in the live stream section right here. Haven't been able to record recently, but I will. But once again, appreciate all of you. Xanu, Nuno, Groovy Gene. Thank you guys so much. Hope you have a great rest of your Monday. And I will be back for Globex. And we'll see how that goes. Hopefully the losing streak ends right there and it doesn't start a new one. Thanks, Bernie. God bless, folks. Peace out.